My dear learners, Assalamu alaikum warahmatullah. I hope all of you are doing well. Today I will discuss about accounting for receivables. I will solve a question that is, you see here says stamp on 1st January 2014 the provision for bad debt of Bellon Enterprise was Taka 7,000. The bad debt recorded on June 30 was Taka 3,000. The total bad debt of that year, was Taka 8,000. The balance of account receivable on December 31st was Taka 90,000. The enterprise keeps a provision for bad debt at 5% on its account receivable. So here's the stamp. Then we have some requirements that we have to calculate the amount of unwritten bad debt. We have to give journal entries for the transaction above, and finally we have to prepare provision for bad debt account and bad debt expense account. Okay, so number one, calculate the amount of unwritten bad debt or unrecorded bad debt. You see in the stamp that there's total bad debt. Total bad debt of the year was Taka 8,000. Total bad debt means written bad debt plus unwritten bad debt. In total, written plus unwritten, in total 8,000. Where recorded bad debt means written bad debt. Recorded bad debt means written. So written bad debt, or recorded bad debt same. Okay, recorded or written bad debt 3,000. Recorded or written bad debt 3,000, but total bad debt is 8,000. Total bad debt means recorded plus unrecorded. That means written plus unwritten. In total 8,000. Where written 3,000. So unwritten 5,000. We have to deduct the written bad debt from the total bad debt. If we deduct written bad debt from the total bad debt, 8,000 minus 3,000, so we can get the amount of unwritten bad debt. So here unwritten bad debt is Taka 5,000. This is the answer of the requirement A. Okay, then requirement B, give journal entries from for the transaction above. So you know that we have to give journal entries at first. We have to give journal entries at first for the, here's journal entries. Is there any goods sold on credit related transaction? Goods sold on credit. We see that there is no transaction related to goods sold on credit. Okay, so if there is goods sold on credit, at first we have to give journal entries for goods sold on credit. Then we have to give journal entries for collection from account receivable. So there is no transaction related to collection from account receivable. Here's written bad debt. So we have to give journal entries at first for written bad debt. Written bad debt is number one, we have to give journal entries for the transaction written bad debt. Okay, so what's the journal entries for written bad debt? Provision for bad debt, provision for bad debt debit, and account receivable credit. Accounts receivable credit. What's the amount? This is the journal entries for written bad debt or recorded bad debt. Okay, when we see that we cannot collect the money from an account receivable, so we have to write off the account receivable immediately. Okay, after trying many times, when we see that we cannot collect the due amount from an account receivable, so we have to write off the account receivable as bad debt. Okay, so here we have to decrease the account receivable and also decrease the provision for bad debt. When provision for bad debt decrease, then we have to debited this. Okay, then when account receivable decrease, it is to be credited. When provision for bad debt decrease, it is to be debited. And when account receivable decrease, it is to be credited, because account receivable is an asset. We know if asset increases, it is to be debited, but if asset decreases, it is to be credited. When provision increases, it is to be credited, but when provision decreases, it is to be debited. Okay, so due to recorded bad debt or due to written bad debt, we have to give journal entries like that. Then we have to give journal entries for unwritten bad debt. Here, according to the stamp, we have to give journal entries for written bad debt, then we have to give journal entries for unwritten bad debt. So you have to remember that the journal entries of written bad debt and unwritten bad debt are same. So here we have to give journal entries for its written bad debt journal entries. Now I am giving unwritten bad debt journal entries. So both journal entries are same. Okay, provision for bad debt debit and accounts receivable credit. Okay, I didn't write the amount of written bad debt. You know, the amount of written bad debt or recorded bad debt is taka 3000, and the amount of unwritten bad debt is taka 5000. So according to the stamp, I have given the journal entries for written bad debt. Is the journal entries for written bad debt taka 3000, and it's the journal entries for unwritten bad debt taka 5000. Then I have to give journal entries for current year's bad debt expense. Okay, current year's bad debt expense. Is there any amount of current year's bad debt expense? No, we don't see any amount of current year's bad debt expense. So we have to calculate the amount of current year's bad debt expense by following. What's the amount of accounts receivable? A/R, that means account receivable. Accounts receivable is the balance of account receivable on 31st December was taka 90,000. So here account receivable is taka, sorry, I have to calculate at first provision for bad debt, new provision for bad debt. Okay, before calculating current year's bad debt expense, at first I have to calculate the new provision for bad debt. Okay, here we see two types of provision. This is the old provision. Which exists on 1st January 2014. That means first date of a financial year, first date of an accounting year. It's provision for bad debt. It is called old provision, and the enterprise keeps a provision for bad debt at 5% on its account receivable. It is new provision. So as it is given as percentage rate, so we have to calculate the new provision for bad debt by the following formula. So here account receivable is taka 90,000. Is there any transaction related to goods sold on credit? No. No transaction is related to goods sold on credit. So if it is given, we have to add this with account receivable. Okay, now I have to deduct the unwritten bad debt. Unwritten bad debt from account receivable. Unwritten bad debt is 5,000. Okay, account receivable 90,000 minus unwritten bad debt 5,000. Okay, unwritten bad debt 5,000, written bad debt 3,000. We cannot show the written bad debt here. We have to show the unwritten bad debt here. Okay, account receivable 90,000 minus unwritten bad debt 5,000. So we get 85,000. Now, so new provision provision equal to 85,000 into 5%. 85,000 into 5%. So we can get 80. So we can get, I have to calculate this, 85,000 into 5%, that is 4,250. 4,250. You see how we get new provision for bad debt. At first I wrote account receivable 90,000. Account receivable 90,000 minus unwritten bad debt 5,000. So I get 85,000. So new provision 85,000 into 5%, because it is said that the enterprise keeps a provision for bad debt at 5% on its account receivable. So 85,000 into 5%, 4,250 is the amount of new provision for bad debt. Okay. Now, after calculating the new provision for bad debt, as I already know that new provision for bad debt 4,250, now I can calculate the amount of current year's bad debt expense. So I have to work out for that. Here, written bad debt is written bad debt or recorded bad debt. Written or recorded bad debt is 3,000. The bad debt recorded, that means it's written bad debt. Written bad debt is 3,000. So with written bad debt, we have to add unwritten bad debt. Unwritten bad debt. The amount of unwritten bad debt is 5,000. So I can get 8,000. Okay. Now I have to add the new provision. New provision for bad debt. New provision for bad debt is 4,250. And now I have to deduct the old provision for bad debt which exists on 1st January 2014. 1st January 2014, the provision for bad debt is 7,000. So it is called old provision. It's new provision which is to be created newly. It's new provision, and the existed provision is called old provision. So the old provision is 7,000. I have to deduct this 7,000. So I can get 5,250. 5,250. 5,250. So it's the amount of current year's bad debt expense. How can we get current year's bad debt expense? We can calculate the current year's bad debt expense by this formula: written bad debt plus unwritten bad debt plus new provision minus old provision. Written bad debt plus unwritten bad debt plus new provision minus old provision. By this formula, we can get the current year's bad debt expense is 5,250. Okay, 5,250. And after calculating this current year's bad debt expense, we have to give a journal entry. Okay, so current year's bad debt expense journal entry is bad debt expense debit provision for bad debt credit 5,250. 5,250. Okay, so according to the stamp, I gave journal for written bad debt. The journal entries for written bad debt is provision for bad debt debit, account receivable credit, and also the journal entries for unwritten bad debt is same, provision for bad debt debit, account receivable credit. Then I have to calculate the current year's bad debt expense, and for this I have to give a journal entry: bad debt expense debit, provision for bad debt credit 5,250. And as we know, at the end of the year, at the end of an accounting year, we have to close all types of income and expense account, and for this we have to give the closing journal entry. As bad debt is an expense account, so we have to close the bad debt expense account at the end of the year. So we have to give the closing journal entry. As it is debited, bad debt expense is debited, so in order to close the bad debt expense account, we have to credited this item. Okay, so here income summary or income statement debit the same amount 5,250 and bad debt expense credit, bad debt expense account credit 5,250, same amount. So you see, if we want to close the bad debt expense account, we have to credited this account. As it is debited here, we have to, if we credited this amount and if we debit income summary or income statement, so bad debt expense is to be, so by this bad debt expense is closed. Okay, so these are the journal entries according to the stamp. Requirement B is to be give journal entries for the transaction above, it is said. So we gave journal entries for the transactions according to the stamp. You see here I gave journal entries for the written bad debt, unwritten bad debt. Although current year's bad debt expense is not mentioned here, but you have to remember that every year you have to give a journal entries for current year's bad debt expense, and for this you have to calculate the current year's bad debt expense in graph. You have to give workings, then you can calculate, then after calculating the current year's bad debt expense, you can give the journal entry, and after that you have to close the bad debt expense by giving closing journal entry. Okay, so my dear learners, here it is said that provision for bad debt account and bad debt account is to be created or is to be prepared. Okay, so now I have to prepare provision for bad debt account. I have to prepare provision for bad debt account. You see, I will prepare the provision for bad debt account by following moving balance format: date, particulars, JF journal folio, debit taka, credit taka, balance, debit credit, date, particulars, JF, debit taka, credit taka, balance, debit, credit. It's provision for bad debt, account. It's the ledger for provision for bad debt account. So my dear learners, you see here some journal entries. So by the help of the journal entries, we can easily prepare ledger account. So it's the ledger account for provision for bad debt account. So in the first journal, provision for bad debt account is debited. So you have to remember for which account I am preparing ledger account. For provision for bad debt account, and provision for bad debt account is existed as debited in the first journal. So as provision for bad debt account is debited, so I have to 31st December 31st, on December 31st I have to write the amount of provision for bad debt account in the debit side, because in the journal entries it is existed in the debited, okay, debit side. So provision for bad debt account debit 3,000, so debit 3,000, but I have to write down in particulars column the opposite account, accounts receivable. So I have to write down I have to write down the amount according to the journal. As provision for bad debt account is debited here, so I have to write its amount in the debit side, but in particulars column I have to write the opposite account name, account receivable. Then in the balance, as it is existed in the debit taka column, I have to write debit balance 3000. Okay. Then again December 31st, you see here also provision for bad debt account is existed in the debit side, 5000. So again 5000 is to be written in the debit taka column, but account receivable is to be written in the particulars column, the opposite account. Then we know debit plus, as it is debit balance and also debit, so 8000. Then we see that in the third journal provision for bad debt account is credited 5250. Okay, so I have to write the amount of provision for bad debt here is credit in the credit side, because in the journal provision for bad debt account existed in the credit side. Okay, 5250. So at first I am writing the amount according to the journal. Then December 31st I have to write the account opposited account, bad debt expense, bad debt expense. Now you see that here in the debit side it is taka 8000 and in the credit side you see 5250. So here, oh, there's a mistake. You see there's a balance of provision for bad debt taka 7000. I did not write this, but I have to write the old provision for bad debt at first. Okay, so I have to erase this because I didn't write the balance, so I have to write the balance at first. Okay, which is given on the 1st January 2014, January 1 balance BD provision for bad debt 7000. Please see that the provision for bad debt of Balan Enterprise was taka 7000. It is given on 1st January 2014. It's old provision. So when we prepare provision for bad debt account, at first we have to write down the balance which is given on 1st January, and we know that provision for bad debt account is credited account. It's generally show credit balance. So we have to write down the amount here, 7000. Now we have to write down as I described in before, December 31st, you see provision for bad debt account is existed in the debit side, so I have to write down the amount according to the journal, 3000, but particulars column I have to write the opposite account, account receivable. Now I have to balancing this. Here it's credited but it's debited, debit credit minus. I have to deduct this, 7000 minus 3000, so 4000. Okay, then again December 31st, here provision for bad debt account is existed in the debit side, so in debit side I have to write the amount, but in particulars column it's account receivable. Now 4000 credit balance, 5000 is existed in the debit taka, it's bigger than 4000, so 5000 minus 4000 is 1000, and 1000 is to be written in the debit balance column because debit side is bigger, so we have to write down the result in the debit side, 1000. Then here provision for bad debt is written in the credit side. So here 5,250, it's bad debt expense account, bad debt expense account, debit credit side is bigger, so 5,250 minus 1,000, it's 4,250. As credit side is, as credit taka column is greater, it's bigger amount, so we have to deduct 5,250 minus 1,000 and we have to write down the result in the credit balance column. So the balance of provision for bad debt is 4,250. Okay, now we have to prepare bad debt expense account. We have to prepare bad debt expense account. Date, particulars, JF, debit taka, credit taka, balance, under balance, debit credit. Date, particulars, JF, debit taka, credit taka, balance, debit credit. I am drawing the format for bad debt expense account. It's the ledger for bad debt expense account. You see, I erased a journal. Which is the fourth journal, income summary. I am writing this again for preparing the ledger. I erased number fourth journal, which I am writing this again, income summary. Income summary, debit 5,250 and bad debt expense credit 5,250. It's the fourth journal. Okay, so you see that here is the journal, is the ledger account for bad debt expense account. So in journal I have to see where bad debt expense account is located. Okay, so in first journal there is no bad debt expense account. In second journal there is also no bad debt expense account, but in third journal there is bad debt expense account. Here bad debt expense account is debited. Okay, so we have to write down the amount of bad debt expense account 5,250 in the debit column. Okay, December 31st, 5,250, because bad debt expense account is in the debit side. So according to the journal I have to write the amount of bad debt expense account in the debit taka column, but I have to write in particulars column the opposite account, provision for bad debt. Okay, as it is in the debit taka column I have to write the balance 5,250 in the debit balance column. Okay, then in fourth journal is income summary, debit, bad debt expense account, credit. Bad debt expense account is credited here, as bad debt expense account is written as credited, so I have to write down the amount of bad debt expense is in the credit side, 5,250, and I have to write the particulars column, income summary. Okay, so you see that debit balance 5,250, credit taka column 5,250, debit credit minus, so the balance is nil. Okay, if we deduct 5,250 from 5,250, so the balance is nil. So you see that, my dear learners, how I prepared bad debt expense account and provision for bad debt expense account. Provision for bad debt account and bad debt expense account. I prepared this ledger account by following moving balance format. So my dear learners, you see that how I calculate the amount of unwritten bad debt which is required in requirement A, and requirement B, it is said to give journal entries according to the stamp. So I gave 4 journal entries according to the stamp. Okay, then according to the requirement C, I prepared 2 ledger account, number 1 provision for bad debt account and number 2 bad debt expense account. So I think, my dear learners, you understand my lecture. So if you have any doubt, any query, so please write down your queries in the comments box. So my dear learners, that's all for today. Thank you very much. See you in the next class. Okay, thank you.